Franking credits. What are they? How do they work? And most importantly, what's Labor going to do with them? These are the types of questions we've been getting quite a lot recently, and I guess that's no surprise given the media attention surrounding the Labor proposals. So let me explain how franking credits work, and I'll try and keep it really simple. When a company makes a profit, those profits are generally distributed amongst the individual shareholders. Now, to avoid taxing company profits twice, it either needs to be taxed at the company level or at the individual shareholder level. In our current tax system, the company profits are taxed at an individual level, and any tax paid by the company is effectively refunded to the individual shareholders. So let me go through an example and show you exactly how this works in practice. Let's assume for a moment that a company makes $100 of profit. It has to pay company corporate rate tax at 30%, so $30 of that $100 profit will go to the ATO, or the tax office. The remainder, 70%, is paid out or distributed to the individual shareholders as a franked dividend. Now, in this example, let's assume there's only one shareholder, just for simplicity. So the $70 is paid to the shareholder. The $30 paid to the tax office is allocated by the ATO to the company's franking credit account. The ATO then reallocates this franking credit to the individual shareholders in proportion to the dividends paid. So in this case, the $30 that's been sitting in the company's franking credit account is allocated back to the one shareholder. When the shareholder then completes their individual tax return, it adds the $70 of dividend payments that it's actually received, plus the $30 of franking credits, and declares the full $100 as taxable income. That $100 is then taxed at their individual tax rate, and they can claim the $30 already paid by the company as a tax credit or a tax offset. Well, what does all this mean? Well, if a shareholder is on a 45% marginal tax rate, so a high income earner, tax payable on the $100 would be $45. But $30 has already been paid by the company, so the shareholder only needs to pay the difference, being $15 to the tax office. On the other hand, let's consider someone who's on a 0% tax rate. So this could be someone who's on a low income below the $18,200 tax-free threshold for the year, or it could be someone with a self-managed super fund that's fully in pension phase. In that case, there's zero tax payable on the $100, and the $30 is credited back to the shareholder and paid out as a tax refund. So that's how it works currently. Now, under the new Labor proposals, they are suggesting the removal of these refunds. So you'll still be able to offset your tax payable by the franking credits, but if you can't use the full $30 in this case of franking credit, then you won't be able to access any refunds. Now, there are of course exceptions around this proposal, and remember, it is only a proposal, so let's not get too hung up on it and let's not worry about it too much. First of all, of course, Labor has to win the election, and even though the polls suggest that's likely, stranger things have happened, so we'll have to wait and see. But if they do win, I expect there'll be continued resistance against this proposal. There'll probably be some changes if it does come through at all. So we'll just have to wait and see. In any case, that's franking credits in a nutshell. If you're still watching me and you're on social media, don't forget to like this post, give me a comment and share it with anyone who's been talking about franking credits. That would be much appreciated. And if there's anything I can help you with, or you'd like to know more, just drop me a line either via email, phone, or via Facebook. Enjoy the rest of your week, and I'll see you next time.